All right. I kind of had, yeah, I'd seen this. When did I see this? Sunday night, I was watching a football game and I thought about this. And then it happened to me today in a way. And so I go and I look at, I'm watching this game and I'm hopeful most of you guys know what American football is kind of like. If not, I think you'll get the metaphor. During the game, mostly the quarterback does most of this more than other positions. But after a drive, whether they scored or they didn't score, they run to the sideline and they all have those, what are those, Microsoft Surface? They're iPads, right? The Microsoft version of it. And they're flipping through images. Years ago, they'd have to run down the pictures from above and flip through actual pictures. Now it's all technology where they just finger through it. So they look at it and they are looking at the formations and they're looking at that particular drive because they know it's fresh in their head about what they just missed. Does that make sense? What you just missed, what he just missed. Because you got to remember, not that everybody in here has ever played football or quarterback or even knows enough about the game, but it's constant adjustments that make them good throughout that game. So, yeah, there was practicing they did throughout the week to prepare for a team, and before that, training camp to prepare for the year. But in the game, they use that preparation to make the adjustments based on what they see. They know the play they call. They know the play they want to call. They know the play that works to their strengths. And now what does the defense look like? And how are they trying to trick out of what they showed? Right? You got to show your hand at some point during a card game and during a football game as to what you want to do. So you break the huddle, you show your formation. They have to show theirs. You're trying to adjust back and forth to each other. So now we've got these charts and we've got these ladders and we've got all of these other things adjusting to do one thing, is to make it hard for us to stay on the horse, hard for us to stay long. And it's not the market. I don't want you guys to take this personal. It's not the market against you, the market against me. And if you think along those lines, you're going to take it personal, and then you're going to get madder faster. And we want to not get angry too fast. So don't take it personal. It's not the market versus George or the market versus Dave. And don't look at it that way. It's just a mix. It's just a mash of all different kinds of psychologies, positions, emotions, ideas, opinions, all thrown into this cesspool called a market. You know what a retail store looks like on Black Friday or during Christmas, right? When you've got everybody buying it, selling it, that's a market. Now you have it with more money probably at stake than some retail store where there's a frenzy. And so its job is to minimize who buys it at a good price. That's what Target, Walmart, and all these Black Friday stores do. They offer super low prices, but they minimize who gets to buy it to create that frenzy. Well, markets do that just by nature, just by default. They can't let too many people buy it or it won't go up because those people will want to sell it. That whole adage of after you buy it, you're a seller. So it just by nature can't have a lot of people buy it or it won't go up. The point I'm trying to make is how do you drill down into like a quarterback running to the sideline in between drives to analyze what he missed? Are you doing that? And if so, your routine doesn't have to be exactly the same as mine or somebody else's that you're trading with, but it has to kind of formulate into a routine. Does that mean every time you get out of a trade to go and analyze? No. Every day? Yes. Some more or less for different people. But what do you do? What's your Surface? What's your Microsoft Surface or Apple iPad looking over the pictures of the formations you missed? Because the quarterback says it's fresh in his head, right? So let's go to a whiteboard. Where's the whiteboard at now? Whiteboard, share. Change the pen. So what does a quarterback knows when he goes to the sideline? It's fresh in his head, the plays he called in the drive he made. He doesn't have to remember a whole quarter or a whole game of plays. He remembers those 6 plays just came off the field. So he's looking over those images, and he's seeing that a formation was set with showing a blitz, and he stayed in a play that had him dropping back and throwing a long pass, which you don't want to do against a blitz because you got to get rid of the ball. He didn't pick it up, in other words. He missed it. He missed it. So what he does is, next time that formation is set, he's going to minimize missing that play or missing that audible, getting out of a call that might not be a good call for the formation he's seeing. Because the best information that this quarterback has is when he comes up to the line of scrimmage. That's what made Peyton Manning so great. Yeah, he had to have a good arm and he had to be somewhat accurate. It's not like he couldn't throw or couldn't be accurate. Yeah, you have to have those physical attributes. But there are a lot of guys that have more accurate arms or better arms that never make it out of college. Because in between his ears, his work ethic of reviewing what he missed and miss less was just really, really strong. So when he came up to the line of scrimmage, what did he do? He could read a defense probably better than anyone, or as good as anyone in the history of the game at that position. He audibled out of what he saw. He read the defense. So as traders, how do we relate that directly to trading? What are we trying to read? And that's what it is. Remember last week or 2 weeks ago, we talked about reading, interpreting from reading? Well, what we're doing is reading a chart or reading a price ladder. And we could have different variations of how we're reading it because of what we're looking at, but we're all reading it. So you want to take some guesswork out. Does Peyton Manning know for sure that they're going to run a blitz? Maybe they run a guy up in here and then he backs off into coverage because they adjust to him and he's adjust. So no, but he could stack probabilities to know even more than the novice football fan like me knows. I don't know all the coverages. He does. You ever hear quarterbacks talk to each other? They're talking a different language, right? Because they play the game and they're talking how to cover 2, 1 into a net, things that you and I won't understand, even if you played lower level football. It's the same thing when like newer people come to the trading room. They really have no idea what I'm talking about because we're talking at a level that has industry speak that they can't relate to at all. So you guys at least cover that and you get up to talking and you got the vernacular of a trader, but that's not going to make you money. It's just a step that's necessary. So how are you reading the market? And when you're reading the market, what did you miss? Because if you're not missing stuff, then you're not paying attention. Great quarterbacks miss defenses. I miss trades. I miss reads. If you're not missing, you're not paying attention. You're not trying. Period. But how could you minimize the misses or at least catch you're missing something? Because the most dangerous path you're going to get on is to be missing stuff that you don't even know you're missing. I'll give you an extreme example. Story comes out on the news, and you're trading the damn market and don't even know that came out or is driving the market. That's dangerous because not only should you be making money on some event, but you're not aware of something would be inexcusable, but it's a miss. That's a dangerous path, is that you don't know what you're missing, and a lot of people don't know what they're missing. So in an effort not to miss anything, what do we try to do? Catch everything. I don't want to miss, so I don't want to miss, I don't want to miss. So there's always, if you've heard me talk again and again, there's always a common like sweet spot to everything in life. A sweet spot on how nice you are to others without seeming like being like a kiss ass, right? But genuinely nice is a sweet spot. Firm without being a real jerk when you're dealing with employees or subordinates or your children. There's a sweet spot to everything. So when we try to avoid missing stuff, what we try to do is what? Instead of missing, we want to catch everything. And we catch everything, all right. You catch, and then you overtrade because, man, I really don't want to miss it. But yet you go back and you don't do anything to review to minimize the miss. Eliminating or minimizing the misses isn't by trading more, but yet that's the path of least resistance. Well, if I just trade more, then I'll miss less. Yeah, you will. You will. You'll miss a lot less, but you'll catch a lot of the stuff that you shouldn't be involved in. You'll actually be missing your reads. If you're not going back on what you miss, you're going to keep missing it. Or you're not even going to be aware there was some great information. How many people in here, and I know of a few, would say from day one of you learning to trade to now, would you say day one of actually putting stuff on, would you agree that you were missing a lot of stuff to what you know now? And while it might not have made everybody a successful trader, it's given you a much better chance by not missing this information. I think everybody would agree how much everybody, and it's not that I'm this great educator. I don't mean coming and finding me. I'm just saying day one in everything, in anything, you're missing stuff as opposed to then getting the experience. But this is a really tough word because who wants to do this? I don't, especially if it's a crappy day. Who wants to review? Who wants to talk about their day if it's a bad day? Who wants to listen to a guy talk about his good day when you had a bad day on top of that? Nobody does, but you have to. You think the quarterback wants to go over film on Monday morning after a crappy Sunday afternoon game? But he wants to get paid. Do you guys want to get paid? So it's doing the things you don't want to do that give you a chance of being a little bit better. If you did everything that you wanted to do, you would take that for granted. It's doing the things you don't like to do that makes you feel good when you get to do the things you like to do, because you have kind of like a default, something to compare it to. If you got to do everything you wanted to do, you'd be spoiled. Nobody would like you, and or you'd be lazy. You'd be unhappy eventually because you'd have no purpose. People complain about that. But you got to have purpose. So you got to do things you don't like to do once in a while, so you appreciate the things that you do like to do, right? I think everybody should agree. So you have to have some semblance of review and a soundboard to bang what you're doing off of. Review what you're missing. Go back and say, what was I thinking? So let's go to another screen share. Let's go back to the charts. Oh, shoot, when I keep hitting that. New share, this screen. Here we go. So what are you missing? If you're not reviewing what you're missing and going over and over again, you're going to keep missing it. Here's something I missed. And I go over. This is just like this quarterback. He's a second-year player, the Kansas City quarterback, a really good talent. And it was him Sunday night I'm watching. He goes back and soon he's flipping through that surface, through the formations, looking, blowing it up, all that stuff. And I'm like, he didn't get to be good because he's just naturally talented. So this morning, and it had something to do with not feeling right to start the day too, but I don't want to make excuses. I missed even before that. I should have been bullish and I was neutral, and usually I'm not like that. But it was, I think it was even before here. It was even before here. But today wasn't easy either. It was easier to miss. Oh, here it is. So this is like me going on the sideline looking at the film or looking at the images, and you guys should do the same. I knew I missed this early, and then I went back and I looked at it and documented it because I don't want to miss it again. So here's what I missed. I didn't know the market was going to go up, but I was looking to buy this thing after a shakeout of longs, right? So here's the move. All I know at this point is the market sold off. Just start simple. What do you know? You look at the defense, we know that they're probably playing for a run. The market just sold off. It broke from 73 to 68. That's what we know. That's a move. Break things out. Don't try to take too much information. What we know is that this market, hold on a second, that this market just sold off from here to here. We also know that this selling in here and in here, when it gets breached, I want to scratch my head. So like it gets breached there, but I didn't scratch my head. And then all of a sudden, we come over a tick or two or a click or two, this happens. This should have got me, not necessarily long, maybe long, but should have got me bullish if it didn't get me long, and it didn't. What did I miss? I missed two things tied together. This guy getting taken out and this guy coming in and getting the market to go up. Two things that I missed. So when you take it back another click, another bar, it rotates right into those two, flashed green, the green went away, but flashed green and then ran. I'd have liked to be long in here, taking a shot, risking below here initially. But for some reason, and if you guys are listening to me in the room, I was like neutral all in here. I should have been long it probably in and out, let alone neutral. And there was still opportunity to get long as it would look. But it's like, if I don't know any of this, like in here, if I don't know anything before here, I don't know if I'm long or bullish or not. But then with this information, that gives me, oh, I see the linebacker come up, and I should have pointed him out. And I see that on the images, right? So it came off. They shook out longs. A chance that they shook out longs. I don't know if it's going to rally, but chance they shook out longs, and then a transitional moment. Now, there was another moment in here, and if you do this at the end of the week, you're not going to remember, right? You got to do it every couple hours or at the end of each day. If you come in here and you see that this market gets it's really is right here. I'm watching Apple. Apple's getting beat up on their session lows, right? And Mark told me that this is why I like being around other guys. Hey, watch this market. So I don't just watch Apple. I'm watching all the major FANG stocks, right? And they didn't lead this rally. They were getting killed and we couldn't go down. So I actually said, be careful being long. I also knew that this range consolidation, this is just going over what I missed, was set. So your eyes visualize that. This shouldn't surprise you if it goes up, even if you're careful being long. There's a breakout coming, right? Outside the fight. It's coming at some point. Now, after this rallied, I should have been looking to get long, even if I missed it. I should have tried to play it from the long side. Why? Because all I know in this area is that we got strong, and then I pull over these some of these FANG stocks. And what you see in here, if I come on, they won't let me pull it. You know what? I don't want to show you all these stocks because you'll get nervous. Just you're gonna have to trust me on showing you one because they all look like this. So instead of showing you all of them. Now, I don't know, and you don't know, and anybody that tells you they know when they see this, oh, it's going all the way up $3. They're full of shit. They don't know what they're talking about. But what you can say, if you're genuine and you really want to work on your analysis, is at some point, a rally like that could very well, a rejection can look like that. Look at them all. There could be fakes, however, but this stock, along with the other major stocks that drive the NASDAQ, the FANG stocks, all look like that. They didn't lead the ES and the NASDAQ out of the hole, but what they did do is all follow it. So when you look over your shoulder to see if you have any influence on the people you're leading and you see people following you, then you're having some influence, right? That's good. And that was what was seen in here early on, even below 218. It was like they were all doing this. They were all firing out of the hole. When they reject out of the hole, that phrase right there, you guys understand it. But if you were day one, you wouldn't understand that, right? That's like two quarterbacks talking about a cover two versus a nickel, and the linebacker came up. I mean, that quick, you might not understand, what does that mean? Run, pass? I don't know. So even something simple like that. Apple, along with the other FANG names, rejected potentially out of the hole. And they not only rallied, but rallied as steep as they had all morning. A little bit on the open they rallied, but they had just gotten hit hard and rallied hard right out of the hole. Give me 1 second, guys. Hang tight. If you got any questions, pop them in. All right, I'm back. So the stocks that I was looking at that moment were the FANG stocks. Someone's asking. Is that the only stocks you should look at? No. I mean, I think people should, as part of their research, find some stocks that you like that you think can drive the market. If you only dependent on everybody else's, hey, look at this stock, that's helpful and that's good. When you find your own, you build confidence. One more second. All right, guys. Sorry about that. So that's on a lot of these sessions, not all of them. I think about trading and about you guys every weekend, not while I'm sleeping. And it becomes the genesis of these Tuesday meetings. Other opinions and ideas I do as well, but it's like when you look at what a performance, what do people that are performance industries, what do they do? And then I seen them do it. And it's and why do they do that review? They do that review so that they could minimize missing. What did I miss? What did I miss? I didn't see that. Or what's the sense of trying to find out what you missed if it's not going to give you a better chance not to miss it again? It's called improvement. And anybody who've been successful in other businesses in this room, they've had that experience. You only get better at missing less. I used to miss that when I was an apprentice. Now they could do it in their sleep. What was I missing? Now there are guys in here that have done some really good dome work and reading the dome a lot better. So before you started reading it that way, think about what you were missing, right? Were you missing something? The guys that I'm talking about, I don't want to bring up names. The guys I'm talking about that have done a lot better at reading the dome. Just think back before you looked at it that way. Before you looked at the dome that way, what were you missing? You were missing that. The visual of these edge zones make it easier to visualize where guys are stuck. Now I added this chart, and then I was doing something with a guy also, and he's was looking at this, and because of that overlap, I stuck it on the screen. I'm watching it more. I looked at this because I was trading an overnight session. So what I did is I made my filter to 49, greater of 49, and I know some of you guys even use just that area, and you've used it for a while. And then I was talking to someone that was also looking at it, and he was also looking at it 4x4. I don't like the 4x4 because it doesn't show you the rotations as much. So my point is that this gets noisy when you look at it's the same thing as 189 or greater, only it's going to see more action because it's just greater than 49, right? So the filter's letting through more orders. I just want you to focus on, can you read this real time? Can you find that you don't know this is green support because it's a fight between these greens and these reds. Now, I don't know that this market's going to rally like this. Buy it, life is good. But probabilities, if you're talking yourself through it and you're not seeing, for practice sake, do it with this chart because you'll get more repetition, more reps, as we say in the gym. What do you think is going to happen when the market's there? Look over your shoulder. What did you see? But you have to do it like your mind will play tricks on you. We already know it ran up from here. So we're looking for what would tell us it was bullish. But I'm telling you right now, when the market's right there, and you guys hear me in the room, I look over my shoulder and I see this, and this guy's probably stuck, and the upside's the right side. We got through the information we know now is, where do we come from? Higher or lower? Higher. And we just broke down to there. What do we just crack through? This level and this level, because then we're up in here. Okay. So the upside's the right side. And you got to review this stuff, though. So then you can make these calls in real time, because if you can't make the calls in real time, you're not going to trade them. It'll also prevent you guys from trading too much. But you need the reps. You need the reps. If we take this, let's go to real time. And I think we did this last week. We did this with just the regular edge zones. Right in here, if it gets through this 290, and it is, it's already going to drift down. It's going to drift down. It gets through this where this 76 came in. It's going to drift down to 94.5, 94.75. The if when. If this happens, when this happens, this will happen. Now, this 4-tick drift is called when it can't immediately go up with this buying. The fact that it stopped there is not a surprise. One rotation. Take that out. Do we have anything to see on this chart? No. What do we have to see on this chart? Well, this edge zone also is lined up with this edge zone we were just looking at. Forget about this one for now. Some more buying coming in, both on the medium filter and on this edge zone chart. So if I'm it's just an Iranian Syrian comment coming across the wire. That's why I hesitated. If I'm long right now from below or right here, especially from right here, I'm, tapping my knees like, let's go, boys. What are we waiting for? All right. We got the buying coming in. Let's do it. Right? Let's do it. It's exposed. We going to hit it or not? You got the fuel. Let's not creep below this 96.5, 96.25. This 96 even, the very least, that's where this 76, those orders come in. Practice that in real time. But then go back and go bar by bar when you're looking at your stuff to make the predictions as to keeping it simple, though. Don't get ahead of yourself where you need to look at 5 things. Well, this has happened and that has happened and this has happened and that's happened and it should go down. Come on. That's too much BS. Just be simple. Now, when the markets are volatile, are you trading too much? I hear this from some guys. Chances are you're going to tend to trade more, and that's a good problem to have. It's better to overtrade than undertrade. If you're undertrading and not able to trade, the problem with that is you're risk adverse. You'd rather be, they're both problems, not being too risk averse or too much like a cowboy and risk everything. No offense to cowboys out there. But you got to, at least if you're taking a lot of risk, you could work on distilling that down, but at least you got the asset to take risk. If you're not taking risk, because fear is in the way of losing money. Now look at this. You see that buying come in and it comes off? But when you're risk adverse, and FEAR are capital letters every time you click the mouse, well, then you got to find something to get you confident and replace fear. The only way, I think I mentioned this 2 weeks ago, the only way you conquer fear is to replace it with something. Period. You want to replace a bad habit. You want to cure a bad habit, replace it with a good habit. Distract yourself from doing what is otherwise bad. If you want to replace fear, if you want to cure fear, you got to replace it with something. If you're fearful, it's because you're just not there confidence-wise. There's not enough confidence in the tank, because that's the word, that's the emotion that replaces fear. So when you're walking down the street and you were 8 years old and it's at night, you're scared, you're vulnerable, you're afraid. But you're walking down that same street and you're an adult, No, you're confident because you educated yourself that there's not a lot of danger or you can handle. When you're 8 years old, there's a lot of people that could take advantage of you and snatch you up. But when you're 20 years old, there's less people that are going to try to do that. You're just more confident. You're more experienced. If you're fearful, got to replace it with something to get rid of it. If you're fearless, you're going to have to stop being so opinionated because that's what overtrading is. It's going up, it's going down, it's going down, it's going down, it's going up, it's going up, it's going down. Because it is. It's going both ways. So you're right, but yet you're trying to trade. You're trying to trade and not miss anything by replacing it with a trade. If you want to miss less, replace it with reviewing. Don't replace it with a trade. People who overtrade will tend to overtrade even more in volatile markets. When they're real volatile, you can get away with it because there's an opportunity around every corner. When they get into like today, they move, they chop, they move, they chop, and you get chopped up a lot. You got to work on being an over or under trader. You got to find your sweet spot. What makes trading and learning difficult is because everybody's sweet spot is going to be a little different. Sorry for the interruptions and the late start. That's all I have for you today. Find charts that can give you real-time kind of calls. Like this real-time call that just came in here, I expected the market with buyers that came in to stay lower. It hasn't so far. Shows you the strength. And I'll be honest, if I was looking at this market like this in my review, just look at the bottom screen, and I went one bar at a time, I would have said, ooh, this is probably a top for a little while. But if we retest the highs, I'm wrong. That's all. Buyers come in, wham, we go below it. I would have expected it to go down a little bit more from there. And it doesn't. Tried to in here, but as soon as it got back through this red right here, I'm wrong. I'm not wrong when it's trading 01 or 99. That's what your review could do. And it's okay to be wrong, just not wrong for long. We'll see you guys tomorrow if you're in the trading room or next week. Please review, even if it's just 10 minutes a day, 5 minutes a day. Review something.